let's address right now one of the biggest myths in trading. And that myth is that your success is more psychological than it is actual mechanics. Now, this is a very simplistic view and it's pretty misleading. And yeah, while having a strong mindset is beneficial, it does not replace the necessity of mastering a trading setup that has an edge. Successful trading, it needs a robust foundation in trading mechanics, your strategies, your understanding of market dynamics, and risk management. These are all very important roles in your success. And your belief in your ability to trade successfully is really important. It's like when you started to ride a bike. When you didn't think you could, you couldn't. Then you got used to it, you got better at it. So how do you build this? Well, through consistent practice, learning from successful traders, and having some positive reinforcement. So consistent practice, I'm talking about regular paper trading to hone those skills without any risk, maintaining a trade journal to track your decisions and the outcomes, and setting and working towards achievable trading goals. The second one, with learning from successful traders, I'm talking about studying biographies and the interviews of renowned traders. Attend a trading seminar and workshops, and even find a mentor to provide guidance and support. There's some out there. And positive reinforcement is number 3. And this is celebrating those small victories and milestones in your trading journey. And that could be as simple as going with back-to-back wins or back-to-back cutting your losses. So focus on your process of doing those rather than just the outcomes. And just reframe losses. I know it's never easy to do this, but look at them as learning opportunities. What could you learn from it? So the bottom line is it's all about immersing yourself in the market. Learn from the best, practice, and don't shy away from mistakes because they're going to help you. Now, your trading setup, it's your foundation. You cannot rely only on psychology to cover any gap in your trading strategy. Psychology, it's not going to help you if your strategy is based on something other than the mechanics of the market. Markets, they have tendencies and there are patterns, and these are inherent characteristics of financial markets, and these repeat over time. Traders that succeed, they identify, they exploit these recurring behaviors, and that's their edge. A key aspect of this approach is pattern recognition, studying historical price action to identify repeating formations, statistical analysis, using data to quantify the likelihood of specific market movements. For example, if you have really high volume in a breakout, what's probably going to happen? It's going to follow through. And then fundamental analysis. You want to assess factors that drive price. Not all fundamental factors have strong impact on price. Even some made up news story, some rumor can drive price. Now, when you're talking about developing profitable setups, this means identifying higher probability trade opportunities, establishing a clear entry and exit criteria, and implementing effective risk management strategies vital. And when you master these skills, it's going to lead to increased confidence in your decision making because you've shown that your decision making is good. You're going to have an improved ability to manage your emotions during trading. A loss just becomes a loss. Better overall trading performance and consistency, number 3. And when you understand and you can exploit the market tendencies, you can develop a systematic approach that increases your chance of long-term success. So here's a great example. An instrument that makes a large move in one direction and it takes a brief pause. Well, if this is a new move after a longer-term consolidation, what do you think the most likely outcome is going to be? A continuation in the same direction. Just prove that to yourself. Don't listen to me. You have charts, you have historical data, get to work on that. Now, trading, yeah, I agree. It's emotionally challenging. And being resilient is key, but it's got to be paired with a sound strategy. And you want to avoid those gimmicky psychological tricks, right? You want to focus on real world strategies and solid planning. And it's some of these gimmicky psychological tricks in trading. It's like using motivational mantras or affirmations without any substance behind it whatsoever. Keep on chanting you're a great trader when you can't string together one win. Well, your brain knows that's not true. Relying on a lucky charm or a superstition, rubbing your belly before placing a trade is not going to make a difference. And probably the best one is following these made up arbitrary rules like always sell on a Friday. Building emotional resilience through a strategy and a trading plan is going to deliver a lot better results, and it's going to strengthen your self-belief about what you are capable. True success in trading at any level just comes from balancing a psychological readiness. Yeah, you're ready to trade, but you have strategic expertise. Master your setup. And I was going to say setups. Pick one. Become the guru of that setup. Of course, your strategies and your risk management. Observe, practice, learn. Now, one thing you can take to the bank is that trading's a marathon, not a sprint. You really got to balance both the mental and the technical aspects. And when you do that, you're going to handle the markets a lot more effective. So the bottom line, do not fall for that trap of thinking psychology is everything. Now, mental resilience is important, but mastering your trading mechanics and having an edge, that is what's going to set a successful trader apart from those who can never get moving in this business. Keep learning, always. Stay balanced. And just remember that trading success is within your reach. It's just, how are you going to go take it?
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPick's full risk disclaimer and privacy policy.